Hello everyone, welcome to Betty Academy where we make school easier. Please support this channel. Subscribe, watch, like, share, comment down below, hit on the notification bell. So we'll be answering this question about the role of financial system in economic development. So I will go straight to the overview. The overview about what a financial system does. So the financial system plays a crucial role in the economic development of a country. Businesses and industries are financed by the financial system, which lead to growth in employment and in turn increase economic activity and domestic trade. So we also have financial intermediaries. They help improve investment efficiency, leading to higher economic growth. Yeah. So let's go and look at the role of financial system in economic development. We start with the first one, which is savings investment relationship. And what happens is that the financial system helps efficiently direct the flow of savings and investments in the economy. Here, financial systems like banks, they play a major role. They allow depositors to invest money in various deposits like fixed deposits by offering attractive rates of interest. So in a bank, you may open an account and save your money under fixed deposit account, and you'll be getting some interest. You'll earn something. On the other hand, the savings are then channeled by the banks to provide credit to different business entities. So we also have the borrowers. They also come in handy and borrow the money from the bank. So the bank is just a platform where we have depositors depositing their money, and the borrowers, they come and get some loans from the bank. So which are they eventually they go finance their business entities which are involved in production and distribution. Yeah, so banks help in the allocation of resource across different sectors of economy because they deal with so many people. Then we have the second point, which is growth of capital markets. Under growth of capital markets, we have business entities require capital funding, business activities, and production. So we have businesses, they require two kinds of capital: working capital and fixed capital. Working capital is requirements, funds required to run the business in the day-to-day running activities. And fixed capital, in this case, those ones they need that for long-term money requirements. Yeah, so that is it under growth of capital markets. Then we have the foreign exchange markets. This is our third point. The foreign exchange markets help exporters and importers raise and receive funds for settling transactions. It also enables banks borrow money and provides funds to different types of customers in various foreign currencies. It could be in dollars, in euros, in shillings. Yeah, so the market also provides opportunities for banks to invest short-term idle funds and earn profits. Even governments have benefited as they can meet their foreign exchange requirements through this market. Then we have the fourth one, which is government securities. The financial system enables the government raise funds, helping them borrow at a lower rate of interest. The state and the central government can raise short-term and long-term funds from the government securities market. Yeah, so to finance capital requirements by issuing, they may issue the treasury bills and bonds. So bills is for short-term and bonds is for long-term. The government can also borrow funds from the money markets by issuing the treasury bills. Those ones are instruments, and they offer attractive rates of interest. Therefore, the money market, the capital market, and the foreign exchange markets help in the development of trade, industry, and commerce within and outside a country. They also ensure the development of the economy. The other point, which is the fifth one, infrastructure and growth. The financial infrastructure has a strong financial bearing on economic growth. The financial structure signifies the financial assets, the financial market, and the financial intermediaries, which are the three pillars of the economy. Financial services play a crucial role by providing funds for the growth of infrastructure and industry. The financial market provides the mechanism for trade in financial assets through financial intermediaries by serving as a link between savers and investors, and also facilitating the transfer of resources between them. Yeah, those who come and save, and the investors, they go and borrow. Yeah, then we go to the other one, which is trade developments. The financial system helps in the development of both domestic as well as foreign trade, and so industry and commerce. The financial institution provides funds to traders through the financial market, which issue financial instruments like treasury bills and commercial papers. So we have the pre-shipment and post-shipment financed by commercial banks, helps foreign trade, like even the letter of credits issued in favor of importers. So we have the financial system facilitates the exchange of documents between sellers and buyers through banks. The buyer does not need to meet the seller to complete negotiations. Yeah, these transactions help the economy grow faster. Yeah, so they use a financial institution to transact business. The other one is employment growth. A properly functioning financial system helps generate more employment opportunities within the economy. The financial system helps provide funds to the growing business houses, industries, which results in an increase in production. Yeah, because what happens is that you will employ people. So the moment you invest and invest and invest, and as a result of that, you also employ capital in form of that is you employ people. Yeah, so consequently it generates more employment opportunity for both the organized sector as well as the informal sector. So increase in businesses and in the industrial activity, it leads to various employment opportunities. Yeah, so you will have so many opportunities to employ people. So funding availed by startups, they help create additional employment opportunities. Yeah, because they can always employ, because they're in a position. Then we go to venture capital. Venture capital, these ones, they are startups, they have grown big time. However, securing funds for growth is one of the major challenges faced by startups. Yeah, the main reason is lack of sufficient venture capital. Yeah, because we have the economic development of the country will be faster when more business ventures are funded and promoted. Remind you, these are new businesses, so they may not meet the requirements for funding, and as a result of that, that's why the government, they really support these particular ventures. So this capital deficit can be solved when more financial institutions contribute a part of their funds for the promotion of new ventures. In this way, the financial system allows the creation of venture capital. So the last point is about the balances. It balances the economic growth. That's another role of a financial system. So economic development needs balanced growth, which can be attained by propelling growth in all sectors simultaneously. Yeah, the financial system helps allocate savings into investment channels. It helps in mobilizing savings and makes better use of these funds by allowing investments in various sectors of the economy. So the financial system helps channel available funds, thus leading to productive use of money by distributing it across sectors in such a manner that there is a balanced growth in industries, agriculture, and service sector. I hope up to that point you are able to, if you are asked about what is the role of a financial system in economic development, these are the points that you need to discuss. Yeah, so that's the end of our lesson. Kindly watch out for our next video, and don't forget to subscribe. From us, goodbye.